So you're thinking about doing a loan on an investment property, and you've heard this thing called DSCR loans, and you wonder, is that the right option for me? Should I just do a conventional loan? Let me help break it down for you. First and foremost, most of the time, a conventional loan is going to be cheaper. Conventional loans are backed by Fannie Mae and Freddie Mac. So a conventional loan typically has a little bit better interest rate than a DSCR loan. Now, what's a DSCR loan? It simply means we don't care about the rest of your income. We only care about the income on the property we're doing a loan for. So as long as the rental income from that property covers the mortgage payment, then you have your debt service coverage ratio of at least 100%. You're covering 100% of your expenses on that property, expense just being principal, interest, taxes, and insurance, by the rental income you're receiving. Now, you get a better deal if you're covering it by even more. You get a worse deal if you're not covering it 100%, but sometimes a loan can still be done. So DSCR is a simpler process. We're not going to look at your tax returns. We're not going to look at your other debts. We're not going to care about how much you have in car payments or what your job stability is for the job that you're on. So therefore, if you have other issues coming into play, either issues that would cause a problem or just issues because you're complicated. You own multiple businesses. You change jobs often. You've changed jobs frequently. There's variables to your income that say you don't necessarily fit the box. A DSCR loan may be a simpler way of moving forward. But in general, when you look at a conventional loan, if you qualify, you're probably better off doing a conventional loan with a few major exceptions. First of all, conventional loans limit you to the number of properties that you can have. You can't have more than 10 properties with loans on them. Once you have 10 properties with loans on them, you're done getting conventional loans. Therefore, you're better off with the DSCR because there's no limit to the number of properties you can have with loans on them. Secondly, DSCR loans allow you to own the property in an LLC. Why is that a big deal? Well, it limits your liability, hence why it's called a limited liability corporation. So you can actually buy the property and put it in the LLC, and DSCR loans are fine with that. So that can make a huge difference in your risk level. So talk to your CPA, talk to your attorney, and figure out, should I be buying my properties or owning my properties in an LLC? There's a lot of benefits to it, and conventional loans don't allow you to own the property in an LLC. So that's another reason why DSCR loans are significantly better in a few ways than conventional loans. The final option is DSCR loans give you the option to be able to use a prepayment penalty to your advantage. And you'd say, John, why is a prepayment penalty an advantage? Well, first of all, a prepayment penalty is you agreeing to keep the loan for a certain period of time. If you sell or refinance before the end of that period of time, you are hit with a penalty, often upwards of 3% of the amount that you pay down. Sometimes it could be higher, sometimes lower, but 3% is probably the most common prepayment penalty. But if you know you're going to keep the mortgage for a period of time, a prepayment penalty gives you a better deal up front. Never a better deal than what it's going to cost you if you enact or trigger the penalty. So don't ever say, well, I'll just save the money now and maybe pay it later. It's probably going to be a wash. It's not going to be a wash. If you think you're going to sell or refinance before the penalty period, do not take out a prepayment penalty. But it gives you an option to save more on the cost up front of your loan. For some people, you're looking at prepayment penalties that could be as short as 1 year to as long as 5 years, and you really have to evaluate if it makes sense for you. Now, the final thing that I'll say that makes DSCR loans advantageous is the number of units that we can finance. DSCR loans, depending upon the lender, but for me, I can go all the way up to 10 units. You can buy a residential property up to 10 units. Your conventional loans caps you at 4. And by the way, I keep saying finally, but the other thing is reserves are a really big deal in the difference between conventional and DSCR. Conventional loans require us to show reserves, extra money after paying down payment and closing costs, and those reserves cannot come from cash out on the mortgage that you're doing. You're also looking at, if you own multiple properties, your conventional loans require reserves multiplied by all of the properties that you own. And the more properties you own with loans on them, the bigger your reserve requirements are. DSCR loans only care about the property we're financing. So you only need as much reserves as is based on the payment of the property you're financing. And it could be as little as 3 to maybe 6 months of reserves typically required, only based on the payment of that property. And if you're light on reserves, we have flexibility. If you're doing a refinance, we can actually pull cash out of the property and use the cash out as your reserves. So I have some clients who own properties that they've had for years and years and years. They're a bit of a financial pickle. They're using a DSCR loan because, hey, their credit score is fine. Their equity is in a great position. It allows them to pull cash out of the property to get them out of that pickle, and they can use the cash out in order to count as their reserves. We don't care about the extra money necessary. So it is a much better option for reserves. If you have a challenge with proving reserves, conventional loans may not be your best option. DSCR may be the right way to go. I am interviewing to be your lender. I understand the ins and outs of all of these options. So if you have questions about anything, please reach out. Go to my website, www.canilandlord.com. There's a lot of useful information there. You can click there to schedule a consultation with me where I can help walk you through how we can make this work for you. Thanks for listening and have a great day. Don't forget to subscribe.